Welcome to Views from the North, a Canadian rates and macro podcast. This week, I'm joined by Darren Campbell, head of FICC Investor Sales Canada. This week's episode is titled, Much Ado About Tariffs. I'm Ben Reitzes, and you're listening to Views from the North. Each episode, I will be joined by members of BMO's FICC sales and trading team to bring you perspectives on the Canadian rates market and the macro economy. We strive to keep the show as interactive as possible by responding directly to questions submitted by our listeners and clients. We value your feedback, so please don't hesitate to reach out with any topics you'd like to hear about. I can be found on Bloomberg or via email at benjamin.reitzes@bmo.com. That's benjamin.reitzes@bmo.com. Your input is valued and greatly appreciated. Before we start this week, I'd like to take a moment to talk about last week's episode. I had on the Honorable Scott Bryson, and I got a fair amount of feedback, a little more than usual. And I thought it was worth just kind of highlighting a few things. So first and foremost, this is not a political podcast. It won't ever be. It's about rates. It's about markets. It's about the economy. It's about macro. I don't have control over what every guest says. And last week's episode was entitled to give us a little bit more insight on the political side in Canada. But quite frankly, Mr. Bryson has my sufficient respect for me that he's welcome to say what his opinions are and whether I agree with them or not. In some cases I do, in some cases I don't. I don't think it's my place, and I don't think it's the right thing to do to interrupt people and maybe push them in the direction I want them to go. I want to hear their opinions. And so I try to do the same thing with everybody on the market side as well. And so I appreciate all the feedback, and hopefully you have a better understanding of where I come from on that topic. I don't think I'll have the other side on because, again, this is not meant to be a political podcast, but hopefully there was at least a few takeaways beyond maybe some of the political side of things from last week. And this week, we're going right back into the markets, and I have Darren Campbell with me, so we're going to jump right into things. Welcome, Darren.
Thank you, Ben. Thanks for having me back.
It's been an interesting week, to put it mildly. I say that tongue in cheek. Saturday, Trump puts tariffs on Canada, or at least signs them into effect, only to reverse on Monday, with Mexico thankfully leading the way on that. I don't want to say skeptical Canada could have done it on their own, but there's some animosity there that I think is pretty clear. That doesn't necessarily work in Canada's favor. Where do we go from here, I guess? That really is the question. The tariffs have only been delayed for 30 days. So we could go through all of this again. I think at this point, we're all just kind of speculating on what comes next or what Trump wants or what Canada can do. But I'm not sure what else we're supposed to do at this point. So I think we're gonna at least do a little bit of that. And maybe I'll ask you first for what your best, favorite, whatever you'd like to call it, thesis is on either what Trump wants or where this goes.
Okay. So what Trump wants or where this goes, I mean, I do think that tariffs are, they're not going away. So I think that that narrative is going to be spiking and reappearing over the coming days and weeks, right? As we head into the 30-day deadline, but then obviously into the April 1 timeframe as well, when I think it'll be a slightly different angle on tariffs. I think right now it's more of the flavor seems to be a little bit more around border security, and in April we might, it's going to be a more fleshed out thinking around trade and the broader approach. But I think that it's just going to be quite choppy, right? So it's gonna flare up, and when it flares up, who knows, right? I think that it'll be, he might see various headlines where he feels he needs to speak up again about the, his ability to tariff whoever, whenever, and so I think that just is always going to be there. I think that the market clearly has gotten a lot more comfortable with the thought around it not being as bad as potentially originally feared, and that is just a negotiation tactic, and then it might settle at a lower point than where originally threatened. That's where I am with this. I think that there are going to be tariffs, but I think that it's going to be a number that doesn't totally break the economy. And I'm speaking about Canada in particular. I think that if we do find ourselves settling around, let's say, a 10% tariff, it's going to hurt, but it doesn't. I don't think it breaks the economy, but it's going to be very choppy over the next few weeks. And I think that the market is probably feeling a little bit too comfortable, I think, with certain things. And I think that when you look at some of the pricing, whether or not it is Canada versus the US, which is obviously extremely stretched, can it push a little bit further? It feels like, I think so. I think that the positioning is still a little bit vulnerable in that trade. And I think that can potentially, see obviously further extremes before it really starts to find a base. So credit spreads, provincial spreads, things like that, it seems like they're in solid hands, and it feels like there's a lot of dip buyers out there. So, if headlines flare up again around tariffs and we see a bit of weakening, are buyers going to step in? Yeah, I think so. And so I think that that's still a reasonable, provincials to be buying on any kind of meaningful dip around those types of headlines is a good trade. I think that we've been looking at some of the asset swaps around the belly of the curve and back to some of the cheapest levels. And while there's not a great case for swap spreads to move dramatically wider near term, the absolute level on asset swaps is attractive. We do think that there'll be there's going to be some bank treasury buying as we go forward.
Okay, so it sounds like ongoing volatility, which I guess provides opportunity for those who are nimble. There will be opportunities for investors to pick up spread product probably at a cheaper level than where we are now, since we've quickly snapped right back in effectively from the tariff fear wides. And this is going to last a while, which is going to be challenging, I guess, probably. Understatement of the century here. Challenging for market makers, challenging for investors generally. I guess, how long do you think you can keep this up? And maybe I should answer some of my own questions too. But, doesn't at some point there have to be some kind of a limit? What does end up being the end game? Where do we want to go? So if for now it's on the border and April 1st they're going to do all their trade evaluation and whether everyone's being so unfair to the U.S. and all these trade deficits and all the wonderful language that gets used, where do we end up? It's not as if the U.S. is going to stop consuming as much as it does. We can do stuff on the border, and that's already happening, and we can do stuff on drugs, and everybody should welcome that. All of the outcry about some people thinking that we shouldn't give in to the U.S. Well, we should be protecting our borders. We should be fighting drugs. These are not things that are controversial. Giving in on that is not giving in on anything. These are things we're supposed to be doing. We're supposed to be investing in our military. These are all things we're supposed to be doing that Canada has not necessarily done the best job on over the past little while. So the outcry to some extent or criticism of the government about giving in, I wouldn't go that far personally, at least not yet. We'll see where things go. So come early March, do you think we even get there? What should we be looking for in the interim to have a little bit more confidence that tariffs won't come in early March?
Well, you and I talk a lot about it. Obviously, if there was dialogue, if there was healthy dialogue between Canada and the U.S., then that would be a real positive. Is that going to happen? Probably not, right? Just because, you ask about where does this end and I'm not sure if it's totally clear even to Trump where this ends up. I think that I listened to an interesting interview that happened with Jared Kushner a few months ago, and it was very obvious that one of his biggest attributes is the flexibility around this. So I think it's going to be an exercise of pushing on different directions and seeing kind of, what the market reaction is to that. I think you learn a lot when you push in those directions. And so that's the game. And I think that's going to be the game. And whether or not it's border security or trade or bringing manufacturing back, whatever it is, and it could be all of them, right? We had a conversation with a client yesterday where it was, because I think we spent a lot of the weekend being it would be great if we could just know what they want and then try to negotiate around that. Obviously acknowledging that there probably needs to be some concession on the Canadian side on a number of different fronts. And so, but why can't we just have a proper negotiation around it? I just don't think it's clear what that is, right? I think that there's a number of different variables, and I think that there's still, a huge period of just sort of, again, seeing what the market reaction is going to be to various things, seeing how certain countries respond to different things, and so it will continue to get tested, and it'll be tested in when you're not expecting it. So as a result, yes, increased volatility, very difficult to get married to one particular trade in the interim. I think that net, is it going to continue to sort of have a negative impact on, just a drag on Canada because businesses are holding back, consumers maybe are a little bit more sort of wait and see concerned. The Bank of Canada is going to be watching that. Somebody brought up the point that obviously a lot of importers have overbought Canadian goods in lead up to this, and so that might be a little bit of a drag on some of the numbers near term as that buying disappears potentially. But I think that net, it's still going to keep the Bank of Canada, I think, on a slightly more cautious stance, and thus, does it make sense to be kind of playing the curve from the steepening side? Does it make sense to still be probably playing Canada-US from the long Canada side? Probably, right? And look for those opportunities for credit spreads and provincial spreads to be backing up a little bit on that noise and take advantage of it. But
I'll take the other side on the Canada-US. I think you want to wait for stupid headlines or tariffs to actually come, and then you want to sell Canada. I think that's been consistently my view that it hasn't changed. It's not going to change, at least near term. If you look at the 5-year forward 1-year rate, so the 1-year rate 5 years from now, it's still 125 basis points through the U.S., looking in swaps, OIS against SOFR or CORA against SOFR. And that's telling you that the Bank of Canada rate is going to be 125 basis points through the Fed funds in 5 years' time. And will be consistently over that entire period between now and then is actually further through Fed funds that entire time. I have extreme trouble believing that. That paints a world where Canada is in deep trouble consistently for 5 years with no hope of escape while the U.S. continues to perform extremely well throughout that entire period. That is not quite unbelievable for me because anything is obviously possible, but that's a pretty big stretch. The issue I have with the trade is that there's just no catalyst at the moment, and the total lack of catalyst, at least over the next number of months, is makes it challenging to say the least. So I think that's why you just kind of have to wait, I think, for headline moves and that volatility, and then take advantage of it from that perspective. I still think you probably the best timing for that for Canada to cheapen up will probably be in the second quarter. I'm hopeful. I do not know. I'm hopeful that some of this tariff stuff is kind of behind us a little bit by then, at least. We'll see what April 1st brings. But you will get provincial issuance ramping up around then. And so that should put some pressure on Canada further out the curve. So you could see a little bit of cheapening on the Canada front just on the back of that. Increased supply broadly in Canada should weigh a little bit. Before we move on, and I want to talk about the Bank of Canada for a little bit of this podcast at least, it's probably worth going through one of my thoughts on what Trump actually thinks. And this is partially courtesy of Naveen, our inflation trader. I mean, he's been talking about this since the last Trump presidency. That's how long I've been sitting next to him for. And one of the things that he highlighted to me, and it took me, I don't know, way too long to wrap my mind around it, is the kind of, I don't know what the right word is, but implicit export subsidy that most countries provide their companies, pretty much every country except for the U.S. Canada has a goods and services tax, a VAT tax, HST in some provinces. Everywhere in Europe has a VAT tax, and all varying numbers, but they all do exist, sales tax. The U.S. does not have a federal sales tax. There are some state sales taxes, but no federal sales tax. And so when a Canadian company sells something in Canada, we pay the sales tax on that. When a U.S. company sells something in Canada, we pay the sales tax on that. Their goods are subject to that tax. When a Canadian company exports a good to the U.S., they are not subject to any sales tax on the other side of that. And that is the big difference. And so it is arguably more cost effective to some extent. Our margins are bigger if we export into the U.S., into a non-VAT economy. And so I think that's part of what Trump talks about when he talks about fairness in trade. That is an issue for them. I mean, they could just put their own VAT tax in. That's a very simple solution, except for nobody is ever going to vote for that ever. It's a great way to get voted out of office immediately because people hate taxes, especially that tax, and I can vouch for that. This 2-month tax holiday has been lovely. Even if it's only on a few things, I love not paying tax on lunch. It's made me smile every time I buy it. And so that I think that's part of his issue with trade and fairness and all that language. It's not. I mean, I hope that I've laid it out pretty simply. I'm not sure that it's that easy to explain to kind of the layperson on the street that doesn't listen to macro podcasts or appear on macro podcasts. But hopefully that's just something that you all out there can understand and maybe sympathize at least a little bit as to where he's coming from, because there is something to it. I wouldn't just dismiss that entirely. So let's move on to the bank. They came out last week. They cut rates 25 basis points, risk management rate cut. Lots of uncertainty in the NPR, lots of uncertainty in the language. They have no idea. I mean, same as the rest of us. And where do they go from here, I guess? When there were tariffs, there were some odds of an intermediate cut, strong odds of a March cut. Now March has backed off a little bit, but there's still it's nearly 20 basis points, I think, of cut for March priced. I get that the March meeting's I think it's on the 12th, so it's 10 or so days after the tariff deadline. But should we be pricing that much? Is the front end expensive here?
I don't think we're rich. I think that terminal in Canada is we've got it's less than 3 full cuts that are priced into the market, and so given my view that I think this is just going to continue to be a drag through the spring, and is going to have a notable impact on behavior. I think that alone needs to keep the bank in a sort of on a supportive stance. And then, of course, if a tariff does come through of the magnitude of say 10%, then it's to be cutting at least 3 more times, I think is quite reasonable in that backdrop. So I wouldn't be fading the pricing here. I think that it was our economics that projected that if it was 25, then it would be another 150 basis points of easing. If it's 10%, is it kind of in that 75 to 100? Entirely possible. I think that the pricing is probably reasonable for where we are right now, but I, if anything, I think we probably do need to be building in a little bit more from the Bank of Canada, given how obvious it is that Trump wants to push this. He wants to see tariffs, and it'll have a notable impact on Canada.
It's almost like the non-tariff scenario doesn't even matter, because if the risks are hanging over us for that entire lengthy period, whatever that period is, if it's more than weeks, more than a month or two, or kind of gets into the 3 to 6 month time period, we get to mid-year and this threat, whatever the number is, maybe the 25 goes away, but it's still some kind of number. As long as it's hanging over us, businesses will be reluctant to invest in Canada, and so you get, you're right, you get that drag, which makes sense for them to be cutting. You think at least a couple more times, and then you have the tail where something worse happens, and you do actually get tariffs themselves, and they got to cut another 25, 50, 100 extra, or whatever the number is. I'm not enthusiastic about March in particular. I think there's a pretty decent chance they take a breath in March, just to see where things are, how they stand. They already did their risk management cut, assuming there are no tariffs, of course, and just kind of see how the data play out over the near term. There's, I think, even more uncertainty now over how the first quarter is going to unfold. So we had momentum in the fourth quarter was okay. Growth will be a little bit below 2%, which isn't terrible, isn't great. But you had the HST tax holiday. That should help momentum in the early part of the first quarter. So I think Jan should be pretty solid on the data front. But then the question is, did things take a hit in February? And I mean, I don't know. We're 5 days into February, so I couldn't tell you what's going to happen the rest of the month. And I'll be on vacation for 2 weeks of it, so that'll be nice. But there's lots of uncertainty as to what could unfold, and you could have business investment turtle in the first quarter, just absolutely collapse. It's not impossible that it falls by a substantial number and then weighs heavily, and then that'll force the bank's hand to some extent, because you'd have a potentially somewhat wider output gap, even if lower investment means lower supply side investment as well. What are your favorite trades here? And then after that, I'm going to outline how I think all of this ends with my pie in the sky thesis.
It's a bit of a cop-out, but it's so difficult to have a high conviction.
That's the right answer, right? Actually,
and that's what we're finding, obviously, from the client base, right? So, I flagged a couple of things there that I think make some sense. I think that if we end up in an environment where it's a 10% tariff on Canada, and probably fairly well justified, and things don't escalate from there, then can provincial spreads more or less hold in that type of scenario? I think so. So owning the provinces on asset swap, I think just makes sense at the moment. And I think that the curve needs to be, I think, ultimately a little bit steeper as we move into that, as that becomes a reality. I just think that we were a little too quick to sort of move from the world's ending 25% escalating tariffs to this was just a negotiation tactic and nothing's actually happening. I don't think that's the case. I think that there's going to be flare-ups between now and when we, settle on and we get to the end point. And I think that the end point, again, it's going to be something, and it's going to have an impact on the Canadian economy. And it's not something that can necessarily be, the Canadian economy can't pivot quick enough to be able to address it. And the drag between now and then is going to be meaningful.
Okay. I don't think I have any real beef with that. I don't know. I think my biggest issue with all this, so you talk about the world's ending and then the world's not ending. So that's a different annoyance that everyone just freaks out about everything all the time and makes it as if the world is ending at all times. Like Canada still has control over their own country. Like we can do things to make to make all of this hurt less, to make us more attractive, to make people want to build businesses here. Tariffs or no tariffs, it shouldn't actually. We can. That's something that's overcomable. But that different podcast, different time, different spiel. So where does all this go from my perspective? Talked about tariffs on Canada. So I continue to have serious issues with him putting tariffs just on, like focusing on Canada. It just doesn't make any sense. The harm to the U.S. economy on their side of the border would be material. You really hamper the auto side of things. Those plants on the U.S. side can shut down in an awful hurry as well. Like if you put big tariffs on Canadian parts, U.S. plants might just shut down entirely and completely. And then that is massively damaging for the U.S. More for Canada. No, there's no question there, but it would also hurt the U.S. So where I think this is probably more likely headed goes back to that tax argument that everyone else has sales taxes. So maybe he just puts on kind of a global 10% tariff on everybody and leaves it at that, and maybe some extras for certain categories that are a bee in his bonnet, like steel or aluminum or copper or whatever metal or whatever product you want, a few things here and there. But I think one maybe alternative to all this is, don't forget the USMCA comes up for renegotiation next year. They can reopen that early. Maybe that's kind of where we're headed for this year at some point. Maybe it's possible we see kind of a North American free trade zone. So we get some kind of USMCA still, and that exempts Canada and Mexico from the 10% tariffs. But at the same time, we draw a big line around all three countries, and everything that's imported into all three countries gets that 10% tariff and is subject to that in order to avoid any kind of trade diversion through either Canada or Mexico. And what we could do with some of that money that's raised is one of the other big complaints from the president is that Canada shirks their defense budget and NATO responsibilities, defense spending responsibilities, and maybe half of that or some portion of that money goes toward some kind of North American defense initiative. And that kind of maybe satisfies things a little bit. And maybe some of the money goes towards the Mexican border to keep whatever he wants out of America, whatever that is, illegal immigrants and drugs, I guess. And then we get to keep the other 5% or some whatever percentage of it. So I feel like that satisfies a lot of what he wants without doing too much damage, and maybe Canada gets off somewhat easily in that case, but we'll see. This is a guess. There's probably a million scenarios. It's my best guess on February 5th, 2025 in the afternoon. That might change tomorrow. We'll see what the next headline, what the next tweet brings. Thank you all for listening again, and Darren, thanks for coming on.
Thanks, Ben.
Thanks for listening to Views from the North, a Canadian rates and macro podcast. I hope you'll join me again for another episode.
The views expressed here are those of the participants and not those of BMO Capital Markets, its affiliates, or subsidiaries. For full legal disclosure, visit bmocm.com/macrohorizons/legal.